Hey everyone, welcome to the Your Money Your Life podcast. We're at episode 260 of the podcast. Make sure wherever you're listening, you like, subscribe, please 5-star, rate and review the pod. If you're watching on YouTube, do the same things. Also, make sure you comment, leave a notification. We're going to get into this episode. A lot to talk about. There's a lot going on in the market and what's really spurring movement in the market, we'll say. Let's jump right into it first and foremost. Um, Actually had it pulled up already, so let's dive into that. Hide our stuff here for the YouTubers. So, little change today, this morning, trading about flat to lower. The S&P is, and really, what we saw in the last couple of days. And let's pull up our market chart. Is I thought a rather strong move in the market upwards. A lot of optimism in the market. Last couple of days, last week, you could say up 2%. Year to date, we're up 2.85% in the beginning of the year since it's the beginning of the month. So again, we'll see how much this holds. We've talked about it again that we think it's going to hold at least the first half of the year, first quarter or two of the year before you may see a retrace, a correction of some sort. And so we're seeing that come to fruition so far. The fourth quarter earnings season is going to be starting. Netflix came out, and we'll talk more about their earnings in a second, but they came out and had a strong earnings. The market, their stock moved rather bullishly after positive report. American Airlines came out and said they didn't have a great quarter. Their stock tumbled. Weekly jobless claims, that data came in. It was in line with expectations. And now traders are turning their attention to remarks from the new administration as well. So that's the big thing in the market right now. Again, we saw optimism the last couple of days in the market. We're seeing, the move with earnings. We're going to see that. That's going to be the next big thing, along with our data from inflation, wholesale, consumer. All those things are going to play a big, big role in the market. So again, we showed the chart in the past week up 2%. Today we're trading about flat on the S&P 500. And so that's the big news. Let's dive into other news. Walmart. Walmart's saying they're going to pay their multi-store managers potentially up to 600K. So some regional managers will see their compensation jump as high as 620,000 annually as they oversee multiple locations, Walmart locations. So Walmart is boosting what it pays regional store managers here, enabling the top performers to take home more than 600,000. The retail giant recently told those supervisors about increased bonuses and stock award changes that reflect how their jobs of running a collection of stores have become more critical to the company's success. So these are people that are running multiple stores and maybe a large regional location. They can get stock options, bonuses, and awards, all these different things. So the top performers can really, really strike out well there in those regional store managers. And of course, people are looking for talent in a world of where, it's hard to find people that can lead teams effectively, right? And so they're looking for people that can do that. And if they really do their job, perform, the stores perform, they're going to pay them well, it seems like at Walmart or decently well. Have a good reminder that here's another person. Augustus says, here's a good reminder that you're valuable. Walmart regional managers are making over 600K. Here's a quick breakdown of what's happening. Top performers can earn between 420 and 620,000. Increased minimum base salary up of 160 a year, up from 130. Max pay is 260 a year. Stock grants up to 100K. Bonuses as well. So again, good times. They will have good compensation. So yeah, it's a really interesting thing that they're doing. Let's move to YouTube. Mr. Beast. Have everybody heard of the world's biggest YouTuber, Mr. Beast? He said he's trying to buy TikTok. I don't know if how serious he is. He's definitely not solely able to do it. He'd have to have a conglomerate of investors. I know his business is his video content creation businesses probably have $1 billion net worth, along with the other products that he sells. It was like a snack and different things that he's got $1 billion net worth with his portfolio businesses, I would say. But again, this TikTok is worth many, many billions, right? Potentially at some point it'll be worth a trillion. So he would definitely have to use a conglomerate of investors. But let's read what he's saying. So the internet's most followed creator reportedly has his eyes on TikTok. YouTube star Jimmy Donaldson, also known as Mr. Beast, said he's in ongoing discussions with potential buyers for the platform's U.S. business, spokesperson told the Associated Press. Although he's not a part of the group formed by tech entrepreneur Jesse Tinsley, as was previously reported, those investors submitted an all-cash bid after the Supreme Court upheld a law requiring TikTok to be divested or banned. So he's not even part of the investor group, but I guess maybe he's consulting or advising on the investor group that's making a bid for TikTok. Let's run back what's going on with TikTok. So there was supposed to be a ban that came into effect. It did. It was removed. You couldn't use it if you were in the US. You logged in. It said, I tried it because I was actually curious. You logged in. It said, hey, you are, because of what's the ban that took effect, we've removed. And they were preemptively removing themselves from current people being able to use it. I think the ban was supposed to say that you couldn't download or new users couldn't come on board. But then they just said, we're going to just remove ourselves. And then, of course, that was reversed by the new administration, giving a reprieve for I think 60 to 90 days for either um, now the sale is supposed to be a sale where the US gets 50%, a joint venture where it looks like a joint venture company buys a percentage of TikTok and the US would have 50% of that joint venture, which is probably not going to happen, right? Like this deal will probably not go through, meaning in 60 to 90 days, 90 days, I believe it is, TikTok will be gone again. Now, TikTok is actually now not able to be downloaded. I think Apple, people reports are saying that new people cannot download. If you already have it on your phone, you're good. It's there, but new people aren't going to be able to download even during this reprieve 90-day period, which is actually an interesting point. I think there's people are saying they're selling iPhones with TikTok downloaded already for tens of thousands of dollars because you can't download it if you don't already have it. So let's read this update by Sanya. So last week, the platform nearly faced its digital demise, a farewell that threatened to upend creators, brands, and generations' ability to focus longer than 15 seconds. But the protagonist of a campy soap opera, TikTok rose from the ashes, surviving the geopolitical gauntlet for at least 75 more days, courtesy of the administration, who suggested that maybe Elon Musk or Larry Ellison should buy the U.S. operations. In a surprising twist, China hinted at cooperation. Interesting. A rare shift in tone that seems like less like goodwill, more like calculated handshake to dodge fresh tariffs. Um, and then Mr. Beast, of course, jumped into the fray. We'll see. I mean, hey, I think this is you're hearing reports that Meta is offering creators from TikTok 5 to 10K to come and join TikTok, or excuse me, to come join Meta Instagram Reels and post content there to steal some of their top creators and see if they can get them on Reels. So we'll see how that all shakes out. Rather interesting if you ask me. I'm fully trying to find out what happens in this saga as it continues. Let's see a Meta. Meta joins Databricks investors. So Databricks, it's a fast-growing analytics startup. Many in the tech community know it, and made another addition to its collection of tech giant backers. Meta invested, at least in the company's latest round. It was a $15 billion round. Meta invested. While the terms of Meta's involvement were not disclosed, Databricks unveiled Meta as a strategic investor in a press release. So Meta is investing in Databricks. I'm curious to understand why or what that. Obviously, it's a company that they see growth and opportunity in, and so they invested in Databricks. So that's quite interesting. Fair enough. Let's look at Netflix. Again, we're going to talk about Netflix on multiple fronts today, but let's talk about their sports strategy first. Netflix has posted a huge subscriber gain in the most recent quarter, thanks in part to live sports, but don't expect the streaming to challenge ESPN for broader rights to leagues or their teams anytime soon, as laid out by the company in a shareholder note. So they're saying, hey, we did the Netflix Christmas Day games, had Beyonce perform at the halftime, but we're not looking to take all the rights of sports. Netflix Sports said that their sports playbook is to focus on can't miss special events programming such as Beyonce Part Christmas, NFL doubleheader, rather than regular season sports packages. So they're saying we want to do these one-off events where everyone's sitting in front of their TV with their family and do a live event then, but we don't want to have the random regional games or even primetime weekly games, it sounds like, on their packages, but they just want to do like the once a year thing, which I don't know. I'm just trying to think. Is that good? Is that bad? I mean, if you're doing the NFL, getting NFL rights is good no matter what, whether it's regular season, random game on a Thursday, which are the worst games ever. Have you ever watched a Thursday night football game? The worst. They're not, the guys don't want to play because there's not enough time to recover their body. The teams usually are crap and suck. The game just sucks. Like the game sucks, but every other game, Sundays, Mondays, regular times. We're supposed to have football on for NFL. Those games are good. That's what it's supposed to be. Look at the playoffs we've been watching. Really good, inspiring stuff. But they're saying they just want the big ones. They just want the big guys. So yeah, I understand that. I think we'll see if that strategy takes place. While we're at it, let's talk about Netflix earnings. So they topped 300 million subscribers. That's pretty big. 300 million subscribers. The US has what, 300, 350 million people. Of course, not all these subscribers. They try to push internationally to grow because they are getting to a point where they've capitulated on US subscriber base. So they're getting to that point. But let's read into it. The shares moved up 14%. They had a great, again, shares moved up 14%. They added nearly 19 million new customers in Q4, more than double what analysts expected. It topped 300 million global subs for the first time. Tuned in for Squid Games, and they also have live sports like WWE. So they do have WWE Monday Night Raw, I think, or something of that nature. I used to watch wrestling as a kid. I don't anymore, but I'm familiar with what's going on over there. They also hiked their sales forecast, and they raised prices. They hiked prices for both its standard and ad-free tier and its cheaper ad plan. So of course they're making money. They're printing money hand over fist, raising prices, adding customers, creating content. And so they're really moving and shaking. And again, we've been a proponent of Netflix. We've said for a long, long time, as the winner of the content battle. That's what we said, and I said that for many years on this platform. And we seem to be proven right. If you look at, let's even look at a 5-year chart. They had the dip in 2022 and they've recovered incredibly well, up over 177% over 5 years. It's been a really powerful company and things, and it's been visible for someone like me that's researching to know that. And so really, really interesting to see what they're doing. Yeah, I don't think there was much else, folks. Don't think there was much else. Let's get to our questions of the week. That's always fun for us to do. Our questions of the week. We're going to personal finance questions of the week and find out what we can learn in our trivia, if there is anything to learn, if there's anything new for us to learn. Interesting. I love this. How much does the average household spend on essentials for their dog? How much does the average household spend on essentials for the dog? Food, water, doggy stuff, daycares, I'm assuming. What does that mean? Is that on an annual basis or a monthly basis? I think it will go annual. I'd say a few $1,000s. I don't know. Yeah, I was right. So most Americans own a pet. How much do you think they spend annually? 260 per month or around $3,000. That's not bad, right? If you own the pet, brings joy to your life for a couple 200 bucks a month, that ain't bad. Um, yeah, let me know, pet owners. What do you think? What do you think? This is a good question. What is the highest interest rate recorded on a 30-year home loan? So mortgage, what's the highest interest rate recorded? As we know, rates have gone up a little bit. Um, so what's the average highest interest rate recorded on a 30-year home loan? What was it back in the day? I think you had to get back in the inflation in the late 70s. I think they definitely hit in the teens, like it was 13, 14, 15%, late 70s, I would say. And I am right. October 1981. So I was close. It was 18%, 18% in the super crazy inflationary period, late 70s, early 80s. They've gone down ever since, and they are, as you see in this chart for the YouTubers, creeping up here. But after the late 70s, they had to lower inflation. They had to lower inflation and they kept it fairly steady. And now we've seen a little bit of a jump here. But yeah, that's interesting. Good. And hey, I felt really, really good about those. After my debacle last week with our questions of the week, I was on it sharp this week with questions of the week. Personal stuff. One, New Street Advisory, we're doing workshops across the country for folks that need it. We're also focusing on doing workshops for specific athletic departments, and we're in talks with many. So if you need this, if you're an athletic department, whether it's football program that's dealing with NIL and understanding how your players can understand how to do taxes, how to do their financial planning, how to do their understanding of budget and money management, we can help with that. And we be able to come and do that workshop at your university and help your kids get a better understanding of what's going on in their own financial life. New Street Sports, we're excited about the kids we've talked to, folks. We were down in the Tropical Bowl in Orlando. meeting with and talking with scouts in the NFL, meeting with and talking with players that we think have the opportunity or should or will get the opportunity to play at the next level, meaning the professional level, NFL. And of course, the NFL playoffs is going on right now. Who do you guys got? I had the Ravens in a future that I put in like over a year ago. Of course, that fell through. Unfortunately, I want Lamar to win one. He just doesn't seem to be able to get it done in the playoffs. Lamar Jackson, that is, Baltimore Ravens quarterback. But we'll still cheer for him, and he'll have a good offseason, hopefully, and come back next year. But now, with there's only four teams left, we got the Commanders, we got the Eagles, we got the Chiefs, and we got the Bills. Where do we land? If I had to put in the future right now, I'd say the Bills, just because I think they're hungry. I think they're hungry. I know it. I know it. The Chiefs, you can't beat them. They're like the Patriots. They're even better than the Patriots in the sense of they're looking to do a three-peat. No one's done a three-peat. I don't think many people have done back-to-back championships, but there's something about those Chiefs that you really shouldn't count against them. If I wanted to be dumb and take a value play, meaning a play that will give more juice, I would go with the Bills because I think they've got something with Josh Allen this year. He seems motivated, locked in, dialed in that team, that city. On the NFC, I don't think the Commanders can mess with the Eagles. I think the Eagles walk through them. So I see the Eagles and potentially the Bills. That's where I see it. We'll see where it lands after this weekend. Folks, thank you for listening and tuning in. Make sure you like, subscribe, do all those things. We'll talk to you as always next week.